We're getting ready to begin the Joint Legislative Audit Committee's hearing. If there are any senators or assembly members currently watching, if you could please come down for us to begin, I'd appreciate it. Thank you.
What? Oh, he's a year today? Wow. Boy, that went by fast.
I know. The first birthday is always a celebration for the community. Yeah, you're right.
Mm-hmm. Oh, pretty good. Yes. Oh, yeah. Mm-hmm. Absolutely.
Good morning. Good morning. How are you? Good. How are you?
Morning.
Good morning.
I gotta look that way. Man, my nose is running. There you go. Trying them all out, huh?
I thought you were warming each one up.
Well, that's part of my job. Being on my road here.
All right. Good morning. This begins the Joint Legislative Audit Committee's oversight hearing. We're basing this hearing on a report that is publicly available. It is available on the State Auditor's website, and it's the implementation of State Auditor's recommendations for all audit recommendations that were issued between January of 2008 to December of 2009. And one of the reasons that we wanted to have this hearing is because the report really highlights how if we were just managing our current State Departments better, we could save more money. And the nice thing about this report is it actually puts a dollar figure to that savings, saying that we could be saving as much as $1.4 billion if the auditor's recommendations were actually implemented. So part of our purpose today is to call those departments in that are listed in the report, and we can't do everybody, but we have selected a few who haven't implemented the recommendations, and find out why, what's happening, because that's part of our oversight role in following up on the audit reports and making sure that these recommendations, particularly these fiscal recommendations, are being implemented. In a time of fiscal crisis, we have to look under every rock and save every penny that we can, and it's part of our responsibility to do that, as well as working with the governor's office and with the budget committees and making sure that these recommendations are implemented. So without belaboring the point, I do want to begin with the State Auditor, Elaine Howe, who's going to brief us on the report. Before she begins, any members of the committee that are here now want to make any opening comments? No? Then Elaine Howe.
Thank you, Madam Chair. Members, for the record, my name is Elaine Howell. I'm the California State Auditor, and as Assemblymember Huber indicated, this is a report that we publish. Actually, we publish it every year, and we cover a 2-year window as far as the audits that have been issued during that time frame. So audits that have been issued from January 2008 through December 2009 are included in this report. What we highlight in there is the follow-up process. So as you, I'm sure, are aware, once we issue an audit report, we make recommendations. The agency has the opportunity immediately to respond and tell us what their thoughts are on the recommendations. But then we have a follow-up process where we expect that agency to report back to us 60 days, 6 months, and 1 year as to the status of implementing the recommendations. What this report gives the legislature and the public is, for all of those audits we issued, what's the current status of implementing those recommendations that we've made? Have some of them been implemented? Yes. As we indicate in the report, 132 of the recommendations. We made 281 recommendations. The agencies in their status reports to us indicate that they fully implemented 132, which is terrific. But there are some recommendations that are still outstanding. At least 61 are still outstanding, and then 88 others are in the process of being implemented. So we will continue to monitor and expect status reports from those agencies. Another process that we have is essentially after it hits the 1-year mark. In the past, prior to legislation that Senator Speer authored for us a few years ago, they would kind of fall off the radar. But we now have a separate report that again is on the website for those audits that have hit the 1-year mark and they have not fully implemented the recommendation. We now follow up with those agencies as well to see where they're at, and we separate those and issue those in a separate report, again, that we are required to publish early in the year. We're required to publish that on January 15th. Also in this report are a couple of schedules. One is to make it easy for members and the general public to quickly scan through and see which recommendations have not been fully implemented, and it'll take you right to the page number where that particular finding and recommendation is published. And then what I think we're going to be speaking about today is we put together what we call a monetary value table. And that goes beyond the last couple of years. Actually, that goes back to 2002. We try to cover about an 8-year window because in some cases we may have made a recommendation years ago, and the benefit of implementing that recommendation will carry over from 1 year to the next. Some recommendations that are implemented that have monetary value may be a one-time thing. But in many cases, it's a recurring value that we have identified. So there's a monetary, we call it monetary values table, and it lays out, again, all of the audits and the investigations that we've conducted where we've either identified wasted funds, opportunities where we could be generating more revenue, and certainly areas where we could achieve some cost savings. So my understanding today is we're going to highlight a few agencies that still have some recommendations that they need to implement that we believe would provide some monetary benefit to the state. And I actually have one or two examples where, to give the department credit, where they did take immediate corrective action, quite frankly, and was able to recoup some funds. And we'll talk about that one under the health services section. So with that, I can answer any questions members may have.
Seeing, did you have a question?
Just one question, and that would be, in general, the extent to which the departments that have been identified have the systems in place to accomplish the goals that would meet the
Sure.
recommendation that has been found in the audit.
Yeah, I think in some cases, Senator, there's concern that they don't have sufficient resources, sufficient staff. But in many cases, it's just a matter of better management practices. In particular, the Department of Corrections. I'm going to be citing a few examples there where we believe if they strengthen some of their management policies and practices, it would prevent some of the wasted funds that have occurred.
Great, thanks. And I'm sure we'll identify those as we go through these specific departments.
Yes, we're going to be hearing from three departments: the Department of Social Services, Department of Healthcare Services, and the Department of Corrections Rehabilitation. If I could ask the Department of Social Services to come up to the table. And the way that we're going to do this is have Ms. Howell give a brief summary of the audit findings for that particular department as we go through each department, and then we'll have the department respond. So, Ms. Howell, if you could begin with the Department of Social Services.
Certainly. Thank you, Madam Chair. The audit that we're going to be speaking about, we issued the report just recently in November of 2009. It was an audit that the Audit Committee approved last year and asked us to look at the CalWorks program and the food stamps program. And there's a specific finding that we identified during the course of the audit, and it's related to overpayments, food stamp overpayments, and the collections related to those. And what we found is that there are about $42 million, a little over $42 million in overpayments that have actually been recovered. And they either reside at the county level or the federal government. So what we're suggesting is that the Department of Social Services has been delayed in taking steps to reconcile with the federal government and with the counties, because what should happen is there's $42.1 million, as I said, in overpayments that have been recovered. These are food stamp overpayments that have been recovered, but the reconciliation would require a certain amount of that money needs to go back to the federal government. A certain amount of those funds need to be returned to the state of California, and certainly a portion belongs at the county level. And our estimates are of the $42.1 million, $17 million would go to USDA, the federal government. But then the remaining $24.9 million would be split between the state of California and the county. So there's $12.5 million in overpayments that have been collected that we believe that the Department of Social Services needs to work with the federal government to reconcile those overpayments so that we can get that $12.5 million back. The other issue that we identified is much of this money, as I said, is residing at the county level. The counties have that money in the bank, and they're earning interest on it to determine whether or not the state of California, if we had received those funds and had been able to put that money in the bank, what would be the interest that we would have earned on the $12.5 million? And it would have been a little over $1 million. So again, there's about between $13 and $14 million here that the state of California should and could collect. So our recommendation to Social Services was to work with USDA and get those reconciliations done so that we can recoup those monies.
Thank you. We have Charlie Metzger, Deputy Director of the Welfare to Work Division, and if you could respond to how the department is trying to address some of those reconciliation efforts.
Okay. Again, Charlie Metzger from the Department of Social Services. And we do not dispute the finding. The finding is accurate. The $42.1 million in food stamp overpayment recoveries had occurred, and we had accounted for it. The challenge is that when we recover the money, there is, as part of the overpayment collections, there's what is called the federal government allows us to do a tax intercept offset process so that individuals who are not repaying their overpayment collection, We then utilize a process through Internal Revenue Service and the Franchise Tax Board to actually recover some of those overpayments by intercepting their tax refunds. And so part of the process, once the dollars have been recovered, even through the intercept process, we actually have to go back through USDA and sort through all of the recoveries to make sure that the intercepts are appropriate and that they agree and that each organization feels comfortable that the appropriate amount has been intercepted, or if not, we make adjustments. And so that's the process that Ms. Howe has been explaining in terms of there's a reconciliation that has to occur. And so it's been a long-standing issue between both of the departments that we have to do this reconciliation process. Things sort of conspired against all of us. USDA lost some institutional knowledge. Some of their staff turned over, and they weren't able to participate in the reconciliation process. Then when they were able to do so, we lost staff who had the institutional knowledge to do it. And so time sort of transpired where neither one of us had the staff that had been trained to do that process. And so we've had to sort of gear up and get our expertise built between the two organizations. And I'm happy to say we've done that. And we have actually worked with USDA. They have, I think there's like, at issue, there's like 16 quarters worth of collections. USDA and our department, we have provided them with all the documentation that they need to do to make the reconciliation process. They have gone through and approved 8 quarters of the 16 quarters. And so we have begun to take the collections and disperse them accordingly to the federal, to the state, to the county. We will not be able to complete the process until they review and reconcile the remaining 8 quarters, but we expect that to happen very shortly. And hopefully through the month of April, we'll get that taken care of, and then we'll resolve the backlog. What we like to do, what we would like to do on a going forward basis is to not let this build up in that fashion. So instead of waiting and doing this on an annual basis, we're going to start doing it now on a quarterly basis so that we can get that reconciliation process done and it doesn't build up over time. As regards the interest that has been discussed, counties are not supposed to put any federal state money in an interest-bearing account because interest is not, they're not permitted to gain on those funds. Because they, in fact, did do that in this instance, we are giving instructions to the counties so that they will remit all interest earned back to the state and federal government on the funds that earned that interest. And then we will remind the counties that that is not an acceptable way of doing business with our funds in the future. So that's where we are on that particular issue.
What percentage of the $42.1 million that were identified are recovered through the tax intercept program that you described?
You know, I don't have that number off the top of my head, but I can certainly get it for you. I don't think it's like the lion's share. I think it's a smaller percentage, but
okay, so if it's 42 million that we're talking about, half or less is through the tax intercept that you described, a new process involving the federal and state governments. Then what about the balance of that?
Yeah, you know, that's a very good question. Is there a way that we could just disperse those funds and then deal with just the intercepts later? Or
well, I mean, going to a quarterly system, as you've described the new process, is not going to achieve recovery if less than half of the $42 million identified in the auditor's report is through the tax intercept that we're talking about.
Because
so there's something else that's not working, and
right.
What is that?
Well, that's a very good question, and I don't think I can answer it for you, but I think I can look into it.
Does the auditor know?
I don't know the answer to that question, Senator.
Senator Cogdill.
Thank you very much. Maybe you covered this and I missed it, but can you give us a time frame on how long it took to accumulate this $42
billion dollar
It,
or
it,
million
it
dollar?
has been a period of years. Let me just say it was 16 quarters worth of collections.
Yeah.
So that's
4
like a
years.
4-year period.
And we're just now, because the auditor has highlighted this, we're now taking steps to get it?
You know,
back?
I think the reconciliation process has been the biggest challenge because of the loss of institutional knowledge at USDA. That caused some period of time of delay, and then because of the loss of institutional knowledge in our department, that caused some additional delay. And the intercept process only happens on an annual basis. So if you don't have the people in-house at the time that process occurs, then I'm not quite sure if that's what causes the delay. But you're right, and it's unacceptable, and we're going to fix
Yeah, I'll
it.
just pick it up and then.
What, moving forward, what procedures are you putting in place to see to it that we're not making these overpayments in the future?
We get monthly reports from the counties, FNS 209 report, that provides us with their monthly collections. And so we're going to, or maybe that report comes in quarterly, I'm not precisely sure, but once that report comes in each quarter, we have put in place a process where staff will then process that amount of recovery and then work with USDA immediately to begin the reconciliation process for whatever needs to occur at that point in time.
What's the cause of the overpayment? Is it
The
fraud
causes can be a lot of different things. They can be administrative errors. They can be client-caused errors. And some client-caused errors can be inadvertent, and some of them can be intentional and possibly fraudulent.
what's the majority of it?
I think I don't want to speak off the top of my head.
Yeah,
I believe that most of them are client-caused, but I need to go back and take a look.
Are there any penalties involved in this?
No
If
penalties.
that's found to be the case, that someone has fraudulently collected more than they should, that we have to now spend funds to recover? Any other penalties that apply to them for
No
doing that?
penalties from the federal government or
State or local?
otherwise, no.
Okay, thank you.
Senator Ashburn.
Thank you, Madam Chair. If I can go back to the tax intercepted portion and the non-tax intercepted portion, how is it that you were able to identify the overpayment without identifying the methodology that caused it to occur? That would then allow us to go back and change systems and procedures, as you know, as was described with the tax intercept.
Well, I think what the representative from Social Services is indicating is that they do have this money was identified. It is collections. It's overpayments that have been collected. So as far as your question related to methodology, I'm not sure specifically what you're asking as far as the methodology the department uses to collect those funds back, or the methodology that allowed it to happen in the first place. I mean, we saw the same thing that was indicated, and we may have information in the working papers. I just don't have it with me today as far as what percentage was perhaps tax intercept versus others, and then what percentage of the overpayments were due to fraud, et cetera.
I guess the answers to Senator Cogdill's questions, you know, actually line up here, because the counties, through whatever method, have identified overpayment.
Right.
The counties then recovered those funds, deposited them, in some instances, into interest-bearing accounts. So the overpayment's been identified. The dollars have been collected, probably not all that are out there.
Right.
A portion of those we're going to rectify through this federal-state more active approach. Why is the state having difficulty recovering from the counties whatever portion that is that they're retaining at this point? I mean, that's the issue that's been identified. The state is owed this money.
We're not having trouble recovering it from the counties. It's that we're not letting the counties know how much we need to recover. So they have recovered it. They have put it into accounts. It's we have to get back and say, this much you need to return so we can give it to the federal government. This much you need to return to give to us, and you get to keep the remainder.
And why is that difficult?
And that's been just the loss of institutional knowledge and the appropriate staff to actually process and make sure that all happens on a routine basis.
One other question, and that has to do with the interest-bearing accounts on the part of the county. It would seem to me that if we did this properly, or perhaps with a different approach, this is a better way to say it, that could serve as an incentive. If do we need statute to allow it to be, those funds to be deposited in interest-bearing accounts to incentivize the counties to collect overpayments, knowing that they're going to be able to retain some of those funds in interest earned, or some other mechanism that would incentivize for the collection of otherwise fraudulent payments?
We already have an incentive program on overpayment recoveries, and on all of the state share of the recovery, we then permit the counties to maintain a small percentage of the remainder. So they do actually benefit from making that recovery.
I guess I would ask, would it make sense to have a more active incentive program, whether it involved, retaining earnings on an interest-bearing account, which is not now permitted, change that, or to set up a more aggressive incentive program for the counties?
Right. The only comment I can make, Senator, is with regard to federal dollars, that would be a problem, because when we work on auditing all of the federal programs, there's a requirement called cash management, which means the state of California draws funds down. We have to spend those funds within a very short period of time. If we earn any interest on those funds, we have to revert that back to the federal government. It's a consistent problem with the Department of Education. You hear about cash management all the time. So that would be a concern. Now, with regard to the state dollars, certainly that would be up to the legislature to decide if you wanted to modify that portion of the funding.
Thank you. I think this highlights one of the ways that these audits and the results of these audits do inform policy making here in the legislature. But I do have a couple follow-up questions for you. One is, I'm concerned about the loss of institutional knowledge. What measures are you putting into place to make sure that if you only have one person doing all the reconciliation, and then that person's gone, and you have a 4-year gap where that reconciliation isn't happening, how are you guarding against that in the future?
Well, I think that we have been putting some sort of succession planning kinds of activities in place in our department to begin to train for the loss of that institutional knowledge. And so we're doing cross-training, and we're doing leadership training, and we've instituted a lot of, in the last couple of years, mind you, we've instituted a lot of new practices so that we can build the bench for the future. Admittedly, 4 years ago, we weren't actually there. So we're doing a better job now. Hopefully we'll be able to do a better job in the future.
Okay, another question for you. I don't know if you have this number with you, but so we know that 8 quarters have now been reconciled. Do we know how much money is going to be coming back from the counties on the interest level to the state?
The only number I know is what the auditor had projected, which is the $1.1 million. And we'll need to actually get the amounts from the counties as they remit the funding. So that will then have to accumulate as we collect from all 58.
But you think you're roughly halfway there with half of the quarters reconciled?
Yeah, probably about halfway there.
Okay. And I just want to thank the committee, because we wouldn't have had this information had we not approved the audit by Assemblymember Bell earlier last year. And so part of this is just doing our follow-up and making sure if you could follow back with Senator Ashburn and with the committee staff on the things that we asked about that you didn't have information for today, I'd appreciate it.
Can do it.
Thank you very much for coming in. Yep. Next, we have the Department of Healthcare Services. If you can all come up, we're going to start first with the state auditor giving a summary of the findings for this department.
Right. Madam Chair, I'd like a little bit of direction. There are a few reports that we were going to talk about. Do you want me to do one at a time, or do you want me to go through each of them? It may be beneficial that I kind of step through one, and then we could have the department respond. It's up to you and the committee. There's I think 4 that I was going to speak about. A couple of them will be short.
You know, in the interest of time, because some of these we may not have a lot of questions on, let's do all four
Okay.
as a highlight overview and keep it simple,
We'll
and then
try
we'll
to keep
have
it
them
simple.
go. Thanks.
Okay. Well, I'll start with the first audit that we did. We issued, the first one I'm going to speak about is actually an audit we conducted issued in February of 2007, and this is one where actually in my opening comments I wanted to give some balance and credit for an agency that really took immediate corrective action and implemented a recommendation and with a positive result for the state of California. We were asked by the legislature, this was actually a statutory audit, to go in and look at some of the reimbursement rates for Medi-Cal, and in the course of conducting that audit, we identified duplicate payments for the long-term care program for fiscal year 5-6. So we identified that EDS, the contractor, had basically overridden some controls, and the result of that was $3.3 million in overpayments to some long-term care providers. So what we suggested to the Department of Health Services is further investigate those particular claims to see if there were any additional claims, because we only looked at one fiscal year, and then also broaden that to medical claims, vision claims, outpatient claims as well. And to the department's credit, they immediately began to implement this recommendation. They identified additional duplicate payments totaling a little over $5 million. As of January of this year, when they responded back to us again, they've recovered almost all of that $5 million, a little over $5 million actually. And for the medical and outpatient claims that they identified duplicates of about $200,000, they reported back to us that they had recouped about $194,000 in overpayments or duplicate payments there. And it's my understanding, based on some additional work my staff has done as part of the single audit, that there are some good controls in place and they've taken appropriate corrective action. So I think the department should be commended for that. That really turned out to be a positive result on that one. The next audit that I was going to talk about is one we issued in June of 2008, and this is an audit related to durable medical equipment. And again, we were looking at providers of durable medical equipment and what controls the Department of Health Services has in place to make sure that we're either not overpaying or issuing fraudulent payments to providers. And we saw that healthcare services did have some auditing practices and had gone out and done some audits and identified some overbillings by some of these providers. So they looked at about $4.9 million, a sample of 20-some-odd providers, and identified $1.2 million in overbilling. So that's about a 25% overbilling rate. So what we suggested to the department is let's continue to do those types of audits and develop some better monitoring practices to enforce that the reimbursement rates should be appropriate and should be in line with Medi-Cal rates, et cetera. We identified a possibility of $13 million that the state could benefit in this particular instance. The way we came up with that $13 million is the amount paid out just for wheelchairs and wheelchair accessories, which seems to be an area of high potential for fraud and overbilling, et cetera, was about $52 million. So if that 25% rate that they identified in their audits holds true, we're looking at approximately $13 million, and that's just for one particular category. It's one of the larger categories, but we thought if they did some targeted work there would be benefit to the state. So that's what our recommendation to the agency was. So I can finish on that one. They can respond to that. That, again, was issued in June of 2008, so that audit has been out for about a year. The next audit or group of audits I'm actually going to talk about is we've done several audits related to pharmaceuticals and pharmaceutical purchases in California. We've been doing these audits for many years. The first one I'm going to talk about is an audit report we issued in April of 2008, and we felt there were a couple of issues here. One was we felt that if the department, and they actually came up with the estimate, if they deducted a copayment out of a pharmacy reimbursement rate. So the state is reimbursing pharmacies for dispensing medications to Medi-Cal beneficiaries. If the state of California required the pharmacist to retain or deal with keeping that copayment, the state would save about $20 million. The department didn't necessarily think that was the best approach. They came up with some other ideas as far as reducing the reimbursement reduction by a certain percentage. At one point, they proposed a 5% reduction. That didn't work out. They came up with some other proposals that they felt would be even more beneficial than our suggestion for the $20 million. So I, again, would defer to them because that audit was issued quite a long time ago. Another area in that audit that I think is really important to discuss, and we've actually followed up on it, is an area related to rebates. It's supplemental rebates that the state is eligible for, and in many cases there's a dispute between the pharmaceutical company and the state of California as to what that rebate should be. So back in 2003, when we issued the report, we identified an amount of disputed rebates that still needed to be resolved at about $216 million. And suggested that the department really needs to work on trying to resolve those disputed rebates. The department was able to get some positions authorized by the legislature. Some of those positions were limited term positions, and that helped them drive some of those amounts down. It went from $216 million down to about $153 million. But when we did the follow-up, we looked at another window of time and saw that supplemental rebates for that window of time went way up. So I know this is difficult to follow, but the first $216 million covered a 10-year window, 1991 to 2001. Then the state got some limited term positions, really worked on that, got the $216 million down to 153. When we went back in and did a follow-up audit in 2007, we looked at the window of time from 2002 to 2006 to see what's the disputed rebate amount for that window. Well, that was $270 million. So at that point in time, we had over $400 million in these disputed rebates. And we think that the department really needs to be as aggressive and assertive as it can. And the department did, had some limited term positions, wanted to convert some of those to permanent positions because one of the difficulties they explained to us during the 2007 audit is they bring these people in, they train them because they have to be pretty specialized as far as dealing with the pharmaceutical companies and the rebates, and then they lose them to either other agencies or perhaps the private sector. So, but there really truly was some benefit in having those positions available to the department. So that's something I think the state really needs to focus on. Then the last issue was an issue that we identified in a report that we published in May of 2005. Again, another report on pharmaceuticals where there had been a change in state law as far as the pricing for pharmaceuticals. And we identified an error that the state was using outdated pricing method. And the dollar amount was about $2.5 million that the state needed to recoup in overpayments for these pharmaceuticals. That report was issued in May of 2005. When we followed up on that in June of 2007, our follow-up report, as part of our follow-up process, we saw that they still had not yet begun to recoup that $2.5 million. So it's not a significant amount of money, but every dollar counts. So that's something, again, that we continue to are interested in hearing from the department about what they intend to do to collect those overpayments. So that's the issues that we identified related to pharmaceuticals. The last audit is an audit that we issued back in 2004, relatively dated, but it's related to the medical therapy program. And this one has a mix. There were two issues that we identified that the department has corrected, and so we won't have not necessarily overpayments, but the state was paying more than it necessarily needed to for some medical therapy payments at the local level. The state was paying more of its share than it necessarily needed to, and that was based on a methodology that the department had developed. We looked at their methodology, determined that they needed to modify it. They did modify it. That ultimately saved the state for that 1 year $774,000 because we were chipping in more than we necessarily needed to. The other piece of that was Medi-Cal payments that were happening at the county level where there was a county health provider, a health system provider, chipping in some funds for medical therapy. And the state needed to account for that, and we weren't aware of those payments. Again, so that would reduce our Medi-Cal payment. But the state, again, the department, set up a system where the counties on a quarterly basis are notifying the state of how much they've collected from these county health systems, so that's an amount that the state doesn't have to pay. In the audit we did back in '04, that was another $254,000. So those two findings combined are about $1 million, and those, in our opinion, based on what we saw the department doing, have been corrected. The other issue in that report was related to the delivery of medical therapy program services. And this is happening again at the local level, and it's a coordination between county health and the Department of Education for special education students. And the state of California at that point in time was paying the full cost for those services to be provided. And it was our belief that the state did not necessarily need to be paying that full amount. The department, in its response to us, didn't necessarily agree with that, so we suggested that they seek authority or a perspective or an opinion to make sure that the state, because at that point it was $3.6 million in additional money that we were paying, that when we were looking at, we weren't necessarily convinced that the state needed to be paying those funds. So that's the last audit I was going to talk about as far as health services. The biggest one, of course, is the pharmaceuticals.
Thank you, and I know that she covered a lot of ground, but I do want to introduce that we have Pilar Williams, the Chief of Pharmacy Benefits, Luis Rico, the Chief of Systems of Care, Barbara Bailey, Chief of Medi-Cal Benefits Waivers and Analysis and Rates, and Jan English, and I'm not quite sure.
Medical Review Branch.
Chief of Medical Review. Thank you very much for joining us. Just to give you some guidance on kind of where I'd like to talk about. One of the issues I do want to talk about is this disputed rebates. And going from, if I'm understanding the numbers correctly, we had about $216 million in disputed rebates. We got some temporary positions, went down to 153, lost those positions, and went way back up to $270 million. And that, to me, just sounds like lost opportunities for us to go after some money. We talk about this all the time in terms of revenue-generating jobs that we're furloughing or cutting. And I know you've got the positions you've got to get the work done that you need to get done, but how do you prioritize those positions and that work for the stuff that really does help bring revenue in?
Madam Chair, thank you. My name is Pilar Williams. I'm the Chief of the Pharmacy Benefits Division at Healthcare Services. And I think the better way, I understand the desire to break that into years, but I think it's better to talk about the overall rebate resolution process. We now currently have about 13 positions, 13 staff who I think we do have a couple of vacancies that are dedicated, fully dedicated to the collection of rebates for the periods all the way from 1991 to present. Just to put it into perspective, I know these amounts are big, definitely big. I want you to know that this represents approximately 2 or 3% of the amount of money that we actually bill the manufacturers and get paid for. The reason why I like to put that into perspective, this 13 staff deal with 32 million claims a year, over 600 what we call labelers. These are 400 manufacturers, but each one of them may have different accounts. So overall, it's about 600 labelers. And so there's just a lot of claims that constantly come in, most of which have to be obviously reviewed when the rebates are disputed by the pharmaceutical companies. The companies can dispute their payments for many reasons, and I actually think that the 2002 or 3 report from the Bureau of State Audits mentioned the fact that manufacturers can go back and change their prices all the time. They can go back and reprice their drugs for any time back to 1991, and in fact, we're dealing with a lot of that right now. We're getting bills from manufacturers approved by CMS, so this is not something that just happens between us and them. That actually causes the state having to pay back for credits for money that we actually received some years ago. That at the state level has been resolved now. You may not know, we have 2 sets of rebates. We have federal rebates and we have supplemental rebates. These are state-only rebates. Those are controlled by contracts that we have with the pharmaceutical companies. So on those contracts, And actually, this also was mentioned in that report. We actually forbid the manufacturers from coming back and repricing their drugs. Now we only have the authority to do that for supplemental rebates and not for the federal rebates. So that's obviously not a, not a big. I mean, supplemental rebates are only a portion of the amounts that we get. So to your point, we are very much so working very, very actively in recouping the money that is owed to the state. In another comment I would like to make, you have to remember that disputed doesn't necessarily mean owed. There's a lot of these situations where there are errors on the claims. A pharmacist may have entered 5,000 units instead of 5 units and billed the state for that amount. So then we have to go through the process of saying, well, you're right, you don't owe us for 5,000 rebates for 5,000 units. So it's just not exactly the owed amount, it's the amount that is out there for the staff to go back and look through all of these claims and trying to resolve the disputes. So we're definitely actively working on resolving those issues.
Okay, one of the other things that's been highlighted is, and I think we had an example of like wheelchair costs. Having a wheelchair that gets billed to the state for over $3,000 that could have been purchased for $200. And when we're talking about cutting vital services in the state with this kind of a budget crisis, I know it seems small in relation to the numbers that you deal with, but they add up. And it's a real problem if you can't account for, are you paying the best price that you can pay for durable medical equipment? How are you addressing that issue? And that, I know it's going to switch here.
Okay, I'm Jan English, and Chief of Medical Review Branch within Audits and Investigations. And the auditor came in and looked at what we were currently already doing. We identified this problem through our random claims process, where we just randomly pick 100 or 200 claims every week and determine if they should be paid or not. So we discovered what you said, that people were overbilling the department much in excess of what the wheelchair costs and the profit allowed for them to have. So we were conducting audits in that area, and we are still conducting audits in the area. Today to date we've issued about 54 audits, and the providers have only contested 3 of those audits. We've collected about $1.5 million, and we're looking at now the area of Medicare crossover claims, because we feel the problem is also in that. So we're estimating that's another about $2 million. We also did a small study to see if this problem was pervasive in all of DME products and sick room supplies. And we found that the issue really is more heavily focused on wheelchairs and custom wheelchairs. So that's where we're going to concentrate our efforts on. We will be continuing to do the audits, but we are also going to do focused random claims review on this provider group billing these codes. So it, in hopes that it will be a kind of like a self-deterrent kind of activity, so we don't have to invest so many resources in doing audits.
Run that by me just in terms of the numbers so I can get a better sense of it. How many total claims do you have in a week for something? Let's just leave it to wheelchairs.
I don't have that number, but
No.
I could get it for you.
Because you do have that, you do about 100 to 200 random samples within that. So I'm just trying to figure out, is that 1%? Is that 0.001%? Is it?
That's in the whole program. But we did pick up this problem. It's very interesting that small amount will pick up problems in the program, irregardless to wheelchairs. It does pick up problems. But what we're intending to do is do that amount just within these certain codes, which will really focus on picking up a problem if it's there.
So now we've identified a problem because of those random audits. You let people know who actually did get that audit, and only 3 of the 54 contested. To me, that signals a red flag of maybe we don't audit the claims here, but we actually put resources towards going through every claim that was submitted within that code. And if you're not doing that and you're just taking an approach that doesn't really go over, because if the overbilling rate is something like 80%, within just the audit sample that you have, I got to think that there's a bigger problem there and that maybe we should be reviewing every claim. Why aren't we doing that?
We don't review every claim, but the folks that we did audit, they have changed their behavior. So the word does spread through the industry. Remember, we have limited resources, and when we could do that, but it would take away from other priorities. We felt that if we, did a much more focused random claims review on these codes, we can do it, every week or the first week of the month for 4 months. That will definitely send a message. It will prevent them from doing it in the first place. So that was the thought.
Okay, just give me a sense of, because I'm just, and this may just be me, I'm just grappling with the magnitude of that focused review and audits of, so we do more within that particular billing code.
Right.
But how significant is that more? Is it going to cover 20% of the claims that are filed? Is it going to cover 20% of the vendors that submit claims? Just so that you have a sense that I can judge, like, how aggressive are you being at going after that overbilling?
Well, I can't give you the number, but it will be very aggressive that they'll get the message. And in the previous reviews that we've done for similar problems, like in pharmacy, when we discovered a problem, we reviewed 2,000 of the 5,000 pharmacies in the state. So we will take a significant portion of claims that are coming in to look at to see if they can justify what they're billing the department. So it may be up to 50%, but it'll definitely send a message to them.
Okay, here's where I'm leaning on this is I don't subscribe to the deterrent effect of if we just go after a few people, it's going to be a deterrent for everybody. Mm-hmm. So I'm going to flag this as something that I would like us to follow up on and really find out if we've solved the problem of overbilling, because I think that's one of the worst kinds of frauds that people do on the state of California. The taxpayers have to pay an inflated cost because someone tried to overbill us, and it's not legitimate. It's something we shouldn't tolerate. So at this juncture, I'm going to let you go with what you think is the significant message sending, but I'm going to follow up and find out whether or not that actually did have an impact, and when you did further samplings under that billing code, whether you actually saw a difference or not. So just know that be forewarned, you'll be seeing me again. I do want to compliment the department on the $6.1 million that was saved, because I recognize that there's a lot of pieces here and that they're complicated programs and you're trying to juggle it all with the resources that you have. But this is why we do audits, is to find these problems, and we expect that the departments will respond and actually address the problems that are found in an audit. And if we didn't respond, or if we chose to respond in a way that's different than what the auditor recommended, then you're going to be held accountable to those results as well. So I think that that's another piece of it. Senator?
Yeah, may seem like a very uninformed question, but do we have fixed rates for reimbursement based on type of equipment?
Yeah, yes, we do, except for some highly complex custom wheelchairs.
Yeah, the custom.
So how does overbilling occur if claim is received by provider, fixed rate of reimbursement is already established? How does I don't understand how the overpayment occurs.
The provider doesn't have to submit the documentation of what he or she paid for the equipment.
So it's a time issue.
Right. Well, the department doesn't have that requirement to send in the invoice with the claim. So the provider can put down, as the example, the rate on file, let's say, is $3,000 for a wheelchair, but the provider can only have purchased it for $200. And right now, so we would pay either the rate on the file or whatever the invoice, whatever the net purchase price was, plus 100% markup. Okay, so in $200, they would get, $400 would be the maximum they could be billed the department. But since the department does not require that a provider to send in an invoice, then the claim is blind to how much the provider actually paid for it.
I can certainly understand the incentive on the part for the provider to acquire equipment at the lowest possible cost. I mean, at 100% markup, I don't know if that's appropriate industry standard for reimbursement. I mean, I guess the larger question is, is the department reviewing rates of reimbursement for appropriateness?
Yeah, I'll take that one. My name is Barbara Bailey. I'm with the Benefits Waiver Analysis and Rates Division, and we are currently conducting a study on all the rates for Medi-Cal, comparing them actually against Medicare rates, because that's really about our only standard out there. We know that the majority of them are lower than Medicare rates, but we are looking, just started this study, so it should be a while before it's completed.
Will you compare with what insurance companies would pay in reimbursements?
At this point, that is not going to be part of the study.
Of course, their information is proprietary, so it'd be very difficult to get hold of that.
Yes, it's very difficult to get a hold of these.
Okay. Well, I think that's a very good idea. I mean, this goes back to the example of a relatively inexpensive piece of equipment having an incredible markup, and then the state, even if we're able to flag it, the rate of reimbursement is
right.
excessive.
We have been for quite a few months trying to look at different models in terms of cost-saving approaches for many of our benefits, DME being one of them. Just trying to look to see what are other states doing.
Do you have a timeline for the review that you're making?
We don't really. We had some staffing loss associated with it. It's very labor intensive, very important, but very labor intensive.
I would think that this is however, I would think that this is a common procedure, as financial difficulties are common across the country with other state governments, with other with other reimbursement structures. It's not something that could be done coordinated on a multi-state level.
I really don't think so, because if you've ever heard that phrase, if you've seen one state Medicaid program, you've seen one state Medicaid program. Durable medical equipment, there's many optional benefits.
But a wheelchair should cost the same in California as it does in Kansas.
Well, I can't address that. I'm sorry.
But that's my point.
But I can tell you
and so maybe Kansas' rate of reimbursement on that is
what
less.
What I can tell you is, in the analysis that my staff is doing, they are contacting other states. So, yeah.
Okay.
But if there's a one-stop shop for finding the information, no, there isn't. That'd be great, though.
One last issue, and I'll let you go if there's no other questions from member, is on this co-payments. So back to the pharmacy issues, because it seemed pretty common sense that asking the pharmacist as they're dispensing the prescriptions to collect a co-payment, which is what a lot of the insurance companies already do, seems like a pretty good way to ensure that money gets collected. I understand from the auditor's presentation that the department decided not to go that route, but was looking at other routes. Can you explain for us how you're addressing that problem?
Obviously, the report was done in 2002, which was way long before my time. So what conversations went on at that time are unknown to me. However, I do know that state law requires, as you said, there is a $1 copayment that is required on Medi-Cal prescriptions. However, there is also a law that says that the state does not get to reduce that $1 reimbursement from the state, from the pharmacy payment. And there was until just recently a federal law that did not allow for services to be denied if the beneficiary could not pay the copay. So as you can see the dynamics on that, the beneficiaries obviously learned very quickly that they could get their drugs without paying their $1. Many of them obviously probably couldn't afford them. So I think the pharmacists stopped trying after a while, just because, again, they couldn't deny the services. So it did fall back on the department, the fact that we couldn't reduce the payments from the pharmacies as far as that dollar that was maybe was not collected. Now that law, federal law, as far as the denial of the services, was changed with the Deficit Reduction Act, and there is actually now a nominal payment that can be, charged to the beneficiaries. It depends on a series of factors. So the department is now considering some, as part of our cost containment measures, some of those potentially as savings measures for the future.
Okay, thank you so much for coming in, and I will be following up with you on some of the recommendations that the auditor made. And certainly if there's anything that we didn't get to that you feel that the committee should know that you have done, please get those to our committee staff so that we have that information. Thank you. Cameron. Yeah. Thank you. Finally, we have the Department of Corrections and Rehabilitation. And I know that some of the folks who could answer some of the questions are in a hearing next door in the Accountability Committee, but I understand they're wrapping up right now, so they should be able to come here. But we'll start with the State Auditor anyway on a summary of this audit.
Thank you, Madam Chair. What I'm going to highlight in this set of the presentation is one performance audit that we did. Again, it's fairly dated, but it kind of links to an audit we issued that Assemblymember Monning requested and that certainly the committee approved, related to overall operations at the Department of Corrections. But let me start with some of the investigations. There were 3 or 4 investigations that we did that all had similar issues. The first one that we completed was back in March of 2005, and what it relates to, as the other ones I'll speak to relate to as well, is pay differential for individuals working in correctional facilities who supervise inmates. So the first investigation that we looked into was nurses who were granted the pay differential, which is a monthly, basically a stipend for supervising a minimum of 2 inmates for a certain amount of time. I think it has to be 173 hours over the course of the month. Those 2 inmates have to work those hours. And what we found when we went into the institutions and looked at these 25 nurses, they were not supervising 2 inmates. They were not meeting the requirements, essentially, to receive the pay differential. Those 25 nurses, it was at 4 different institutions, and we calculated overpayments to those nurses of $238,000. That's just the stipend or the pay differential. We also received an allegation related to, some office technicians at a specific institution. Another classification, office technicians. Similar situation where they were receiving the pay differential for supervising inmates. We went in, took a look at it, found that in fact, no, they were not meeting the requirements to be eligible for the differential. So then what our staff, and we decided, well, maybe we need to do a broad-based investigation, initiate our own investigation, look at more classifications. We certainly have that authority under the Whistleblower Act. So this past year, we went out and visited 6 different institutions, took a sample of some various classifications by using some information from the state controller's records, payroll records, who are the individuals at these institutions who are receiving this pay differential, and then took a statistical sample so we could project to the universe of institutions. And again, we found problems at 5 of the 6 institutions that we visited where individuals, again, were receiving the differential but were not meeting the requirements to be eligible for that differential. The specific sample of employees, it was a small number, approximately, I can get you the specifics, 30 employees, I think, or maybe a little bit more than that. But basically, the actual sample that we looked at was about $35,000 in overpayments. However, when we projected it to the classifications that we looked at, we came up with a potential overpayment of $588,000. The reason we wanted to highlight these today is we think these are very simple. As I said, management controls can be put in place to make sure that if individuals supervise inmates, they meet the requirements, absolutely they're eligible for the differential. But if they're not, they should not be receiving the differential. The interesting thing that we found when we conducted this last investigation that we initiated on our own was that a supervisor who is supervising. So if I'm the individual receiving the differential for supervising 2 inmates, Madam Chair, if you're my supervisor, you get the differential as well. So when you're reviewing my timesheet to make sure that I met the requirements, the incentive for you to say I didn't meet it, with all due respect to state employees, may not necessarily be there for all individuals. So, do you know?
No.
Let me look in the investigation and see if I can find the answer to that, Senator. But we brought that to the department's attention because we felt that that's something, if they had to go back to collective bargaining, they would have to do that. But I will make sure I get that information to you. But we felt it was important to point that out because if it is something that the department can modify, we think it's something very important that they do. In fact, what we believe should happen is the information, the inmate's timesheet and the individual who's supervising the inmates should go to personnel, and personnel should be verifying. So they're external to the situation. So they're verifying, and then they can also verify that the supervisor is eligible for that differential. So we think if they don't have to go to collective bargaining, and again, I apologize for not having that specific answer, this is something that they could fix relatively easily and has the potential for saving a significant amount of money for the state of California and still, allowing those individuals who rightfully have earned the differential to receive it, but certainly not those individuals who aren't meeting the requirements. We had a couple of other investigations where there were a couple of physicians at San Quentin who were receiving overtime payments when they in fact had not worked the overtime, pointed that out to the receiver. The receiver, I just wanted to point this one out, it was about $108,000 for 2 physicians. As soon as we pointed that out to the receiver, they immediately set up an accounts receivable. Those 2 physicians are paying those funds back to the state. But again, there seems to be a theme here in our investigations of, personnel practices and just making sure that timekeeping records are accurate and that people are paid, appropriately and paid for what they're doing as far as services to the Department of Corrections. We had a couple of other investigations where we identified there was space in Southern California that the Department of Corrections had decided to vacate some of that space. They notified the Department of General Services that they wanted to vacate the space, so their lease therefore needed to be renegotiated. Unfortunately, that process to renegotiate and deal with that lease took 4 years, so the state of California paid for vacant space, approximately 6,000 square feet of space, $580,000 over 4 years for vacant space. So we made recommendations, which we now do in our investigations, to both the Department of General Services and Corrections, that they need to make sure that they stay on top of this situation, because what we found is Corrections notified DGS, it kind of sat at DGS, came back to Corrections didn't immediately get to it. So just to tighten up those processes so that if you make a decision you're going to vacate space, let's get that lease renegotiated as soon as possible. So those are a few examples of some investigations that we've done. The audit that we did, it's dated. It was back in July of 2002, but the theme is we have done a variety of audits at the Department of Corrections, and this will be no surprise to you, where we've identified overtime is a major issue, a payment of overtime, and they have been not filled as many correctional officer positions as they should and perhaps can. But what we pointed out in July of 2002 is they needed to set up some type of a forecasting method to determine how many correctional officers they need to staff appropriately at the institutions, taking into consideration back in 2002 the projected growth in the inmate population and the attrition rate. Because if you'll recall, back in 2002 is when the retirement changed for correctional officers. It went to 3% at 50. So you could project that there are going to be a significant number of individuals who decide to retire at age 50. So we felt that they needed to come up with some kind of a model to get closer to what their true staffing level should be. The other suggestion we had is to modify the academy because at that point in time, cadets had to spend 16 weeks in the academy. One of the thoughts was, let's reduce that to 12 weeks and then have the remaining 4 weeks at the specific institution that cadet is assigned to. You can get more cadets through the academy. So those were some of the recommendations. The reason I felt this was important to highlight is clearly this continues to be an issue for the Department of Corrections. The audit that this committee approved last year that we issued, Mr. Monning was the requester. We identified overtime costs of $480 million in 07-08. So this is a continuing challenge for the Department of Corrections. And we are in the process of finishing the second. We have a second half of that audit that we're working on right now, and we will have some additional information when we publish that in May. So that's another one that I thought we should highlight today, because to the extent we can reduce overtime costs, we're really going to achieve some savings within this agency.
You have a lot to cover. And this is Darby.
Right. My name is Darby Kernan. I'm the new Assistant Secretary of Legislation for the California Department of Corrections and Rehabilitation.
Great. And I actually see that we have someone else coming in now, as the Accountability Committee has just ended. We're just getting started.
I can start with regarding the lease agreements, though, because the auditor did point, after the auditor released her report, it did prove a lot of, we didn't have a great system in place to kind of see where our leases were and our inventory. So after the report came out, we put into place several different processes to make sure that we had a better understanding of what our lease inventory was, how we were handling it. And with that, we've gotten rid of 16 unnecessary properties at a savings of $2.1 million to the state. And that the initial actions we took were applying the state administrative manual space standards for all new lease space and reconfiguration projects. We reorganized our lease teams to train and implement a coordinated technical project design and specification review, and instituted formal lease review processes focusing initially on consolidated opportunities. The benefits that we've received with all of that is the reduction of the properties, but we've improved our lease efficiency and cost savings assessment. We've also improved our response to program needs and improved our reporting and analysis tools. So we've created a more transparent process.
Over what period of time?
The last 2 years.
The 2 years. And is it because a new method is in place?
Yes.
To review those leases and to deal with them in a more timely manner?
Yes. I think before, as the auditor said, we would kind of say, okay, this is a property we're not using, kick it off to DGS, and kind of feel like it was off our plate at that point. And now we have a process where we follow through until the end, and making sure that the properties that are recognized as not necessary any longer, that we take care of those immediately. On the overtime issue, just because the Undersecretary wasn't here, I know that we've come close to filling a lot of our positions, and we have been focusing recently on our higher needed areas for correctional officers. The Undersecretary can talk much more detailed about that. But I don't think he heard the specifics either of certain things, so I think it's kind of a disadvantage. I don't know if you...
Well, I can give you a little highlight of the stuff that is concerning to us. Obviously, we approved an additional Department of Corrections audit earlier in the last year, and that did reveal that overtime costs did make up about $480 million of the 07-08 budget. It is an issue that has been flagged in prior audits, partly because of some decisions to not hire as many recruits, and then I think the auditor had some suggestions on ways that you could shorten that process to get more people in the pipeline to try to bring down some of that overtime cost. But it's really a management call on how are you addressing the issue of making sure you have the staffing resources so you don't have to rely on overtime.
Madam Chair, members, the real difficulty, I believe, is because of the flux of the department's population. The administration has employed a number of measures to try to address population, included credit earning and addressing parole through non-revocable parole that was approved in SB 18. So those things actually result in us predicting a decrease in population. So it's very difficult to run cadets through the academy when you believe you're going to have a reducing population. So that leads to our balance of trying to figure out how many cadets to run through the academy and still anticipate population reductions so that we're not paying for staff that we don't have the inmates for.
Well, I think that calls into question one of the auditor's findings before on the that calls into question one of the auditor's findings before on the formula and how it is that we don't have the formula right to make accurate projections about population and who I think I'm recalling this from 6 months ago as kind of part of conversations that I had before that I think the department's response was it's going to take us 2 years to find the person with the level of expertise we need to do the appropriate modeling to be able to really figure this stuff out.
Well, I think that the department applies what it can to evaluate what that proper formula is, but I don't know that there is any formula to predict that, for example, the situation that we find ourselves in as a state and certainly the department with reductions of about $1.2 billion in cuts. So while there may be a formula that the department can employ, and I'll have to provide additional information to you from our administrative staff, the evolving situation, I think, really detracts from any ability to find a model that's going to predict how many correctional officers we're going to need moving on into the future.
See, now, that I'm going to have to take issue with because I don't think the fact that
The population's been more or less stable for the last 10 years. It hasn't fluctuated more than 2,000 or 3,000 inmates a year in the last 10 years.
But we, of course, employed credit earning changes and through SB 18 and non-revocable parole that will try to address the parole population coming in.
Right.
All of those have impacts on our population that I'm just suggesting.
But the problem that was identified occurred during the last 10 years when there was very little change in your population. And you were still doing way more overtime because your positions were vacant.
And there was a decision a few years ago to close down our academy that caused some significant difficulties that I know you're aware of. So, your point's well taken. I just think it's an evolving environment out there that the department has very, difficulty predicting what our correctional officer needs are going to be. Today, we have trouble predicting that.
Do you have anything to add to that?
Well, that's, what we identified, and he didn't have the opportunity. What I was speaking to was the first audit we issued back in 2002, and that was one of the concerns we raised is you need to have, at that point, that's when it's my understanding, switched to 3% at 50, so you've got to factor in the model attrition rate, and then also look at the inmate population projection, which is another audit, and I think, Madam Chair, you're referring to. We issued an audit back in September of 2005 looking at the model that the Department of Corrections was using for budgetary purposes and for volume, as far as the number of the correctional officers they need and number of inmates they would predict. That model was so flawed, we hired a statistical expert from Sac State that we've used in the past. We've used her on the Oracle audit. We've used her for a lot of different regression analysis, et cetera. Well-renowned expert, and she said that this model is off within a 4 or 5 year window. It's off by 30%. This model is not good. So what her recommendation was that we included in the audit report was there are statistical experts at UC Davis, at University of California, Berkeley, within California university system that could assist the department in developing a model that would assist it both from an inmate perspective, and you absolutely have to factor in changes in statute, changes in sentencing laws, et cetera. But you go back and you revise that model, perhaps yearly, perhaps every couple of years. I don't know. I'm not a statistician, but I think there are things that the department could be doing and should be doing to do a better job of projecting its inmate population and certainly projecting the number of correctional officers that they need.
Thank you. So here's my message to you on this. I get that it's complicated. I get that there's a lot of factors that go into it. It is not an excuse in my book that we have budget cuts of $1.2 billion affecting you, that you can't project staffing needs for a prison population. I think that it may not be within the department department's expertise to do the statistical modeling that's needed to make accurate projections, but saying because it's complicated, you can't do it, isn't a good enough answer. You got to find the resource. You got to find the experts that are out there in order to get models that work, and ask for help when you need it instead of just kind of trying to handle those battles on your own. If the audit identifies a problem, we need to hear how we're going to address that problem. And just saying, well, we're going to continue to say it's complicated and there's a lot of stuff that goes into it isn't enough.
Well, I hope that I didn't represent myself to say just that. The reality of it is the department uses the model it has, as mentioned, and it takes into account attrition rates and all that. My only point to you is that we're in a very changing environment in the department today, and that definitely does have some impact on what our needs are. The department would be remiss to run cadets through an academy when we're not going to have the inmates out there next year. The legislature passed that January 25th. So I don't mean to say it's so complicated that we're not doing anything, Madam Chair. I'm just simply saying it's a very changing environment that the department needs to adjust to.
Senator Ashburn?
Madam Chair, I want to move to, there's like two parts to this. One is the inmate population and the staffing need that you have. And then the other part is the management of the overtime, given the population, given the staffing, and as was described by the auditor, a relationship between those who supervise inmates and differential pay, and even those who supervise the employees who receive that differential pay, and they're receiving differential pay for that supervision work. That is something, it would seem to me, that you can control and must control within the management practices of the department. And so where do we stand on changing those? And it came up before you arrived, a question as to whether, with respect to supervisors and employees both receiving differential pay, which could potentially create an incentive for people to overclaim differential pay, whether that was a collectively bargained item and where that came from. So I guess there's two questions there.
Let me try to take the one about the correctional overtime, and that, of course, is multifaceted. It's vacant posts that Madam Chair was mentioning about how we run cadets through. It's regarding sick leave, medical guarding and transportation with the receivership, and certainly increased inmates going out for specialty clinics into hospitals. The department has to send staff out there with them, and that has all had an impact on our savings. And we have, on our overtime, excuse me. So we have limited ability in some cases, for example, sick leave, to monitor. Now our staff, our supervisory staff, have employed sick leave management practices that try to use corrective action to curb the use of sick leave. The federal law, FMLA, has prevented.
Let me go to the specific.
Okay.
An employee receives differential pay for supervising inmates. It turns out, as a result of the audit, the employee is not supervising the inmates as required to receive the differential. It also turns out that the supervisor of the employee receives differential pay for certifying that the employee receives differential pay. Are you addressing that?
Yes, in the department, we're talking about a relatively few staff at a particular prison where the supervision pay was being provided.
Does the auditor agree with that assertion?
Again, he missed the beginning. We've done 3 or 4 investigations, and the first investigation was specific to office technicians at an institution. Then we did another investigation of nurses at 4 different institutions. Then, as my office has the authority to do so, we said we need to just take a statistical sample, look at a variety of classifications, and determine whether this is more widespread. Based on the results of that investigation, we suggested that the department really needs to look at its policies, because we found issues at 5 of the 6 institutions that we visited and across the board as far as the classifications that are eligible for a differential pay. And what Senator Ashburn is referring to is what we pointed out in our last investigation is, and I'll use myself as an example again, I'm receiving a pay differential to supervise the 2 of you because I have to supervise 2 inmates. Madam Chair, is my supervisor. She's making sure that I'm meeting the requirements. And so she certifies that I've met the requirements. She also gets the differential. So if she says that I haven't met the requirement,
Does that happen?
then she doesn't
Again,
get the
was that
differential either.
collectively
So that's
bargained,
what we pointed
that
out.
the supervisor gets the differential for certifying that the employee gets the differential pay? I mean, that is.
I'll have to go back and check.
If
all
a
my
system
time
was set up for fraud, well, maybe fraud's too strong, but certainly for conflict of interest and resulting in overpayment.
What I would say to that, and all my times as a warden in addressing this, the supervisor never received differential pay for inmate supervision just because another employee as described.
But the auditor
having
says
said that,
that.
I don't know the specifics of the audit, but never in my history and experience have we ever paid the supervisor for another employee supervising inmates.
Would you get back to us with a specific answer on that point as to what it is that would cause? The auditor says it happens and that it's fairly widespread in the samples that they've done. How does it happen, and what do we do to change that?
I'll bring you the policy. I'll send you the policy.
Let me give you another real-life story, and that has to do with, and I realize that this isn't a question that involves the receiver as well, but the staffing for the medical inmates who are going to a hospital in Bakersfield is determined by the department. Right now, as I understand it, it is 2 correctional officers per inmate round the clock for the time that they are inpatient at the hospital. If a physical change was made to the facility, which has been estimated to be $350,000, to make it a secure floor of the hospital, a secure floor, $350,000 capital improvement to achieve that the staffing then changes to 1 correctional officer per 2 inmates. Now, I've been bringing this to your department's attention for over 2 years. I don't know how much we have paid in overtime and staffing in excess of need during that period of time that we probably could have secured several hospitals. How and why can we not solve a problem like that?
The receiver determines which hospital the offenders go to. And so in looking
we know where they're going in this instance.
And we know what it would cost to bring the hospital up to the standard necessary to lower the cost of the.
And if it didn't cost that amount, Senator Duchesne, through the chair, have the department tell us, no, it's not $350,000, it's $550,000.
Well, specifically to San Joaquin that you were so kind enough to bring to our attention, and we've had communications with the hospital administrators, that hospital has agreed to pay for the construction. The construction of 300 or whatever thousand was a capital outlay issue, and they've agreed to do that, and we are proceeding along that line. Now, having said that,
but not expedition. My gosh,
the receiver, sir, said that with the construction of AB 900, that they're not going to put sick people in the hospitals or in the prisons down in the Central Valley, and so that hospital wouldn't be used. We wouldn't guarantee those beds, and so that puts the vendor both in a predicament and it puts the department in a predicament.
Right. I get that. Yeah, we created the uncertainty through that. Okay.
That's a fair response, but that's part of why we have these oversight hearings, is so that we can look at the auditor's recommendations and we can try to figure out places where we can help you reduce some of this overtime cost. And if there's something that we can do through an appropriation to fix some of these problems, let us know, but we have to have that dialogue. So, I don't think that we're done with having oversight conversations with the Department of Corrections on fixing some of the recommendations from the auditors, but if there's anything else that you want to add that that's been part of these audit reports that you're addressing that we should know about, if you could add that now.
I guess I was specifically to the audit findings related to the inmate supervision pay. Is that what you're asking me?
Yeah.
The auditors had several audit findings over the past decade that many of which have not been implemented. The recommendations have not been implemented. And the focus of this hearing is recommendations that haven't been implemented that would be costing the state money. Why haven't they been implemented, and what are you doing to address those problems?
The difficulty, Madam Chair, in trying to respond to that is I'm not aware of the specific audit findings that you're talking about. The department very much wants to come to these hearings and on these specific issues respond. And as I've tried to respond, there's complexities to, San Joaquin Hospital or to the management of overtime in our prisons. So my commitment to you is that we will come back as these specific issues, identify why any of the auditor findings weren't implemented, and try to address the situation with this committee.
Madam Chair, if I can be helpful, the auditor has conducted audits. The audits are complete. Some of them have been complete for a long period of time. Would you commit to us that you will, upon returning to the department, devote staff to reading the audits and then figuring out what to do about it?
I guess that would suggest that we're not reading the audits.
Well, you said, no, you yourself said you're not aware of the audit findings.
I am personally not, Senator, as we sit here is what I was saying.
But you're here on behalf of the entire department. So I have to go with the words that you used, which implied to me, and this is not personal, it implied to me that you were not aware. And so, I mean, if you're the chief deputy director of the department and you don't know that there are audits and audit findings, how are people who are responsible for day-to-day administration to know these things?
Senator, I think a good example is the lease issue that was raised by the auditor that we addressed, and we made the changes. And I believe there are other audits out there, and we can go through and kind of tell you what we've done and what we haven't done to the audits. That's easier
exactly what
option.
I'm asking.
Let's do that. Let's do that, and we will make that as part of our agenda for this committee to do a follow-up. And I got to tell you, you know what, Mr. Kernan, we didn't put your title on the record. Just for the record, could you?
I'm the Undersecretary of Adult Operations.
Thank you. And I really want to thank you for coming. I know that you were in another hearing on another issue earlier and did miss some of the auditor's overview, and we'll correct that. But I think you're very good at answering these questions, and I hope that our grilling of you doesn't discourage you from coming in, because it's a dialogue that has to happen. We really have to know how you're addressing these recommendations, and I'd really appreciate it if you came back and had that dialogue with us after you've had a chance to review some of these.
I promise to. Thank you very much.
Okay. Thank you so much. Thank you.
Thank you, Madam Chair.
And this concludes the Joint Legislative Audit Committee.